Alright, so it's currently 16 minutes past 5, as you can see, and I just completed off my successful trading day. Man, all I'm going to say is trading gets easier with time. I'm going to repeat this. Trading gets easier with time. I've been trading for the past 4.5 years, and in the 4.5 years I've been learning a lot about trading, and mostly these last 2 years I've been trading gold only, and gold needs a specific way how you can trade it, and the strategy that I use is a very profitable strategy, and I've showed it to you growing small accounts with a certain number, which I'm not going to mention obviously because again YouTube likes tracking my videos, but the strategy I'm going to show you in this video just banked over 400 pips. Now look at this, guys. I posted this. These were the trades that I called, as you can see. Obviously, you can see, and then this was the entry before, and then look at that how price moved, and then look at that. You see that? That is how much price moved. Over 400 pips. Look at this, guys. This is 400 pips. This is all you do. Now do the math with 400 pips. Even though I'm using a 0.01, that is already an amount that you're making. Again, I'm going to mention numbers. So I'm going to just jump into the video and show you how do we trade this strategy. How do we trade gold? Because again, gold is the best pair. It moves 400 pips in a day, 100 pips in a day. Like, there is nothing like gold. I don't know about Nasdaq. I only know gold. Zabu. Gold is crazy, and if you know how to trade it profitably, you can make yourself, I don't know, I'm not going to mention money again. YouTube likes tracking our content, but all I'm going to say before I start this video, it gets easier with time. You need to grow up here mentally also. You can't just think you come and trade here and then be able to make. Anyway, if you're new around here, make sure to subscribe and let's get started with this video. Now traders, first things first, I trade only gold, and the reason why I love to trade gold only, gold tends to move more than 400 pips, sometimes 300 pips, sometimes even 1,000 pips in a single day. Now I discovered the only strategy that can work on gold is marking out previous highs and lows. So what do I mean? The trade that I caught is right here, as you can see. This was an A setup. Traders, first of all, for the longest that I've traded in the forex market, I have never caught what we call an A setup like this. I've called so many, but this was the easiest. The fact that I was risking only 20 pips and price doesn't even reverse back. So this strategy helped me with even timing my entry. The time I took this trade, it was clocking 3:30. Now most of you guys know, anytime it clocks 4:30, 5:30, price is moving a certain direction. Now this was 3:30. As you can see, this is my trade right here, as you can see. Now let me explain to you this trade properly. So I'm just going to pull out my trading view, obviously, as you can see, and I'm going to select a different pair that doesn't have my analysis. So I'm just going to search for XAUSD, just like this, and then I'll select this one right here. Now this one doesn't have my analysis. I'm going to delete whatever analysis that is on here. First things first, always what I do is mark out the previous highs and lows of the previous day. So yesterday was a Wednesday. So what I do is come here and mark out Wednesday candle. So obviously you can see the Wednesday candle is this one right here. You can see this one right here. So when I mark out the previous high and low of the Wednesday, I'm literally marking out the resistance and support. So you can see that being my previous low and that being my previous high, as you can see, as simple as that. You know, you don't need to complicate trading, man. Mark out the previous high and I'm going to mark these purple. I'm going to make them purple color, as you can see. We're going to make them purple, and then also this will make it purple, just like that. Now after marking out the previous high and low, literally what I'm trying to do is I want to see what price action is price going to give me in between that zone from yesterday's markets. What is price going to give me? You understand? But now I spiced up this. I don't just mark out the previous high and low. I also mark out the 50% of price. I use my Fibonacci retracement, put it from swing high to swing. You can put it wherever you want. And then I'm going to look out for the 0.5 level. That is the 50% level. So this is the 50% level right here. That one right there. So it's in white color, as you can see right there. Now after that, we remove the Fibonacci retracement and then go ahead and zoom into the smaller time frame. Now, why do I do this? This helps me understand where price is going to go next, you know, because when the new candle opens, it's going to try and sweep either the previous high or the previous low. As simple as that. Now it depends where price is currently at. Now when we zoom into the 1 hour candle, you're going to see what I'm trying to mean. Now here is where we look out for the price action. You can see, but now here the price action, it doesn't like, so it's not like very clear, and it shows that price is going to dip down right now. But we're talking about the morning trade. So the morning trade price was currently ranging around this zone right here, and you can literally see price was ranging around the previous low. You understand, traders? Now This brings us to the smallest time frame, which is the 15 years time frame. Now, here is where I want to look out for price action. Anything that I can understand. First of all, what happened yesterday? What happened yesterday? We had price dip from this zone right here. Look at these traders. This zone, and then price kept on dipping. Now, what comes to my mind when I see price forming a zone like this? You see, yesterday, what happened yesterday? All I'm going to do is mark out my trend line. Just like this, you can see, I mark out from this zone, connect here to here, and then pull it down like this, as you can see. Now, why did I do that? Obviously, you can see price, that is the price action that price built up yesterday, here. Now, look at the other side of price. Price also formed this, and then this. What am I going to do? I'm going to mark out the previous, that also trend line. So mark out the trend line, just like this, as you can see. As simple as that. Now, you can see what I'm trying to talk about. Here, this is the price action I'm talking about. When you mark out the previous low and high, you're looking to see what price action did price form yesterday, and this is the price action. And guess what? By the time I woke up in the morning, price was currently ranging at this zone right here. This zone right here, as you can see. Now, this zone, I can also mark out my trend line. This zone right here, from here to here. Look at these traders. Another trend line. Now, price is destined to go up. That is obvious. Price is destined to go up. How do I know? Look at the traders. I told you we're looking out for price action. Price had come forming previous. You see, these are lower lows, lower lows. This is a lower low. Now, price had gone up to try and break this zone, this upper line, right? And it failed. It started rejecting off this zone. So it started rejecting as it's coming down. Now, this is why it's even important for you to know about Forex patterns. What you see right here is price was coming back down, but it was coming back down to retest onto the zone that it has already broken. This purple line is the previous low from yesterday. Remember, we marked up the previous low and high. Right now, you're only seeing the previous low because price is down. It has been ranging around the previous low. Now, when price tries to break like this and closes back from inside our previous low, what do you expect? Price has to retest. Same thing. Look at how price comes back to retest. These guys. First of all, I've showed you the price action of what price has been doing. You can see the price action. Look at the price action. Price had given us this. It's more of actually a falling wedge. And you can even see this gap right here. Obviously, price had to come back to this trend line. It has to come back. But obviously, we just trade what we see. We don't trade what we know in our heads. You see traders? And also, we had these gaps that were created from yesterday. You see these gaps? Meaning we had to have price to fill up all these gaps. But again, we only trade what we see. So what I saw here is price had closed back from my purple line and then come back to retest. Now, this is where my point of interest was for me to catch my trade. So I caught the first trade and I hit it negative 25 pips. My first trade I caught here. Immediately when price had closed above here. But I had ignored one thing, this fair value gap that was down here. Literally, never ignore fair value gaps. So this would be my next entry, but again, I didn't panic, I didn't do anything. That would be my entry right here for us to buy right now. Again, reason why we're buying, price had to come back and sweep all this liquidity. And I'm going to come to this white line. I'm going to come into this white line in a few. So our entry was down here. Look at these traders. This is why you need to know all the Forex candlestick patterns on your fingertips. This particular candlestick pattern is called a hammer or a pin bar, a bullish pin bar. A bullish pin bar, actually this is a red one, so let's just call it a hammer since it's red. You can see price pushed down to mitigate into this fair value gap and then reverse back and close above here. Now, look at the most interesting part. If I'm even just to use my Fibonacci and I wanted to know how far is price going to go, look at this. I apply my Fibonacci from swing low to swing high. Guys, look at where price reversed from. Literally, look. Most times we ignore the simplest stuff, like the basic stuff in trading, actually the easiest. The easiest trades in the Forex market that never had easy trades. Price reversed at the 0.6 level on the Fibonacci retracement. You see that? On the 0.5 level, the 0.6 level. That is most times where price reverses from whenever we have an impulsive. So take this as an impulsive retracement. Now here we're actually even studying the price action that we're having in here. So why snipers would catch the trade from here? Snipers, you see. Now remember, we read this price action here. We read this price action. We looked at previous lower low, and then price comes back here and gives us a high low. Exactly at this zone right here. Now we caught our trend exactly at this new candle. Now this new one, this particular candle here that you guys are seeing, this one right here, that's why we took our trade, and I shared this in my Telegram group, both in the free group and in the VIP. Even people that went in for late entries, they made money. Our first take profit was exactly at this zone right here. Look at these traders. Our first TP was at this zone right here. That was our first TP. Our stop loss was at exactly at the wick of this candle right here, which is around 30 pips. You can see that was our first TP, and most of you guys would see that is a small TP. This is 100 pips, 111 pips. It's actually 120 pips. That was our first TP. Second TP was this up here. Now this is another zone. This zone right here that I'm drawing. Now I'm going to mark this zone as a yellow line. Why is that zone important? Because price had failed to break it in the previous zones, exactly here. Meaning if price ever comes back here, it has to try and break this zone. So that's where I put our other TP. Now look at this. How much is this? Look at this, guys. TP number 2, which is 230 pips. Stop loss is the same. You see that? Now we had another TP, TP number 3. TP number 3 was this white line. Now remember, when I was marking out the previous high and low, I also marked out the 50% of how much price moved yesterday. So I just measured between the high and low, which is the 50%. And guess what? That is why I marked our other TP, which is this one right here. So I'm going to put this here, and then I'm going to mark out our last TP, which again was from here to exactly up here, which is 400 pips. You can see, traders, and that is how you catch 400 pips, man. A setup risking only 20 pips, man. I don't know, I told you guys it gets easier with time. There's one thing I always had, like, big guys that have been in the market for a long time say, if you're trading the forex market and your setup appears once, trade only once. If you're trading and your setup appears twice in a month, trade only those 2 times. The only problem, we want to trade every setup that we see. Literally, this has been a setup. And again, when I come back to my setup, this was my setup, as you can see. There you have it, my setup. This is the trade that I caught. And then the one I was just showing you right now, it's right here. As you can see, this was my trade. Look at it, traders. This was my trade, literally. Price action. You see, the importance of marking out the previous highs and lows, I've showed you right now. Price tried breaking. If it fails to break, it's going to come close back from inside, consolidate, fake out traders, and then retest, and then shoot back to the upper side. As simple as that. It doesn't get, it always gets easier with time, man. If I'm to show you yesterday's trade, Monday trade, it gets easier with time. The secret is in trading one setup. Only trade when you see your setup. If you don't see your setup, don't trade. Guys, that was my trade. Literally, it gets easier with time. If you're not into my Telegram, check the link below this video. You're going to find a link to my Telegram. Join it. Let's win together. Let's win together and crack this forex market. You know, my other trade would be here. And why would this be my other trade? Because this is 50% of price. Now, if price has moved over 400 pips from here to up here, it has to reach a time and recover. You know, so again, impulsive moves and retracements. Now look at this. Look at where price has come back to retrace. Let me show you guys. You see where price has come back to retrace? This gap that was left in the market. If I'm to apply my Fibonacci retracement, same thing. Look at this. From here to up here. What do you see, guys? Price comes back and reverses from the 0.6 level. Again, the most basic stuff we ignore, they're the most easiest. The most basic stuff we ignore in the forex market are the easiest. Traders, that has been the strategy for you. Very easy, very precise. We are looking out for price action. And the fun fact is, I don't even look for news. I don't look out for what's going to happen in the news. Sometimes I look out for them, but my strategy just aligns with the news. My fundamental and technicals align together. They're always like this. Yes, sir.